Hello dear traders, welcome to Insta TV. I'm Anna Kasatkina. Let's take a look at the most important financial events for today. Today's weak data on the UK GDP growth rate came as unpleasant surprise to economists. However, the report delivered a preliminary estimate of the third quarter UK GDP, which is usually based on partial information. That is why the final GDP report is expected to unveil data which can significantly differ from today's readings. According to the preliminary estimate, the UK GDP growth rate slowed down to 0.5% in the third quarter from a 0.7% expansion in the previous period. Analysts had expected the British economy to advance by 0.6%. The UK GDP rose by 2.3% year-on-year in the 3 months to September of 2015, coming lower than experts had forecasted. The UK Office for National Statistics said the current slowdown in the UK economic recovery was caused by the recent slump in the Chinese stock market. Economists noted that figures came lower than expected as the British construction sector posted a 2.2% fall, which in its turn was explained by abnormal climatic conditions in August. The last summer month was marked with extremely high humidity at the territory of the United Kingdom. Besides, the UK manufacturing sector had a weak month, declining by 0.3%.
In spite of weaker than expected preliminary data on the UK GDP growth rate in the third quarter, the sterling managed to hold its positions against other most mayors. Even with the recent slowdown, the UK economy recovers faster than the European one. Thus, the US GDP data, which is due to be released on Thursday, is expected to confirm that the US economy grows at slower pace compared to the recovery rate in the UK. In the short term, the British pound is expected to strengthen against its US rival, hitting the level of 1.54.
Despite discouraging data on the GDP growth rate, analysts expect the UK economy to advance in the fourth quarter of 2015, considering a recent hike in the number of new jobs and a 3% rise in average earnings. Economists expect the benchmark interest rate to be raised as early as the second quarter of 2016. And you have just watched the daily financial news on Insta TV. See you back tomorrow. Bye.